Y vamos con nuestra primera entrevista del día. Nos acompaña en los próximos minutos Athanasios Vamvakidis, director global y director general de Estrategia FX G10 de Bank of America. Good afternoon, welcome.
Thank you, good afternoon.
Thanos, how would you assess the current atmosphere of tense calm in the equity markets? What do you think investors are waiting for?
There is substantial policy uncertainty, which has led to volatility and a break of historical correlations. Investors are waiting for clarity on tariffs to a large extent, on fiscal policy in the US, and also how the rest of the world will react to the US policies. For example, are we going to see reforms in the European Union? Are we going to see more trade in the rest of the world? And as a result, they have reduced risk exposures, and they do expect that global growth will slow as a result of the high tariffs and the overall policy uncertainty.
Thanos, what kind of impact do you think it could have on the markets if the US government suggests that a fully trade agreement with China might take 2 to 3 years?
Well, if in the meantime high tariffs remain, this will have a negative impact. Obviously, negotiating a trade deal can take time, but in an ideal scenario, if both sides are willing to negotiate, they will reduce the tariffs in the meantime. When you have 145% tariff against China and a 10% tariff of the US with respect to everybody else, this is a substantial increase in trade protection. And if you are wait to see when, if, and what kind of trade deals you're going to have, and in the meantime, you have such high trade protection, the economy will suffer and markets will have to reflect these negative implications.
Thanos, according to the forecast you publish, Bank of America published this week, you expect a stagflation scenario for the US economy. Why is that?
Because we have a combination of high tariffs, which lead both to higher inflation and lower growth, and also fiscal policy tightening, which will lead to lower growth. And the overall policy uncertainty is also likely to reduce investment in the economy. Consumers are likely to take a wait-and-see approach. And the Fed is also at a difficult position because as inflation will be rising, the Fed cannot ease policies to support the economy as the economy will be weakening. So we're in a situation in which, compared to very optimistic forecasts, consensus forecasts when the year started, expecting fast growth in the US without inflation, because of this policy mix and elevated uncertainty, we get exactly the opposite. Lower growth with higher inflation. And this has been very negative for the US dollar.
Thanos, do you think Wall Street is starting to get used to the market swings triggered by President Trump's announcement?
Not really, because every day there is a new headline that moves markets in different directions. And we have seen actually the US administration announcing one policy, and then the market reacts, and then they try to take a few steps backwards. But this is not a good environment for markets. Markets need certainty, they need clarity, and particularly they are concerned seeing the US moving in unconventional policy territory. And this explains why we have at the same time, for the first time in history, the US stocks underperforming global equities, US yields increasing, and the dollar weakening. And what explains this is that investors are reducing their overall exposure to US assets across the board. So everything US is falling.
Thanos, what are Bank of America's expectations regarding the outlook for the US bond market, especially after the recent episode that have unsettled the administration?
Well, the bond market actually has established some market discipline, and this is most likely what led to the decision to pause reciprocal tariffs. So at least the bond market, we can argue, puts a limit on how much unconventional policies we could get. So the market works from this point of view. But unless we see a pivot back towards conventional policies, volatility is likely to remain high and yields are likely to remain high in the US. The US still has a very high current account deficit, needs foreign investors to finance it. The government deficit is very high. There is huge supply of government bonds, and investors, as they are trying to reduce their exposure to the US because of the policies that are being implemented, this leads to higher interest rates in the US. So these market pressures are likely to continue until we get some policy clarity.
What's your view on the currency market?
We see further weakness in the US dollar. Our forecast for euro dollar by the end of the year is 1.17, with risks actually for further euro dollar upside. We can even test 1.20. This is because both the unconventional stagflationary policies we have seen so far in the US, but also prospects for reforms in the European Union. More fiscal spending in Germany, more defense spending in the EU, and structural reforms at the EU level. This is likely to support euro dollar. The overall dollar position is still neutral, so there is more room to sell the dollar. And also, the massive flows into the US in the post-pandemic years were to a large extent not hedged for FX. So as investors are exiting, they are likely to also increase hedge ratios, which could result to further dollar weakness.
Thanos, to what extent do you think an overly weak dollar could affect the US economy?
Well, you can argue that the weak dollar should be positive for an economy supporting exports. However, the reason that the dollar is weakening at this point is not good. It's because of policies in the wrong direction, high tariffs, policy uncertainty, and investors reducing their exposures to the US. From this point of view, it is a symptom of a weakening of the US economy from a very strong level. So by itself cannot really offset the other forces that are the causes of both the weakness in the US economy and the weakness of the dollar.
A difficult scenario. How can investors take advantage of this volatility-driven environment?
I think on the one hand, we should be cautious to see if there is a policy U-turn in the US, if instead of tariffs, we get trade deals, if we get some clarity on the fiscal policy stance. Still, if there is such a return back to conventional policies, we can see the dollar strengthening again, although not back to where it was, because some damage has been done and the market will continue pricing a risk premium. It is also important to follow progress in the EU reforms, because the consensus seems to be that this will take time. If we see faster progress in the EU, there are definitely opportunities in Europe. And more broadly, there is a question, will the rest of the world get closer together, agree free trade deals with each other in response to high tariffs in the US or not? If we have more trade in the rest of the world, this is a positive scenario for the global economy outside the US, and these will be opportunities as well, including for emerging markets, that can benefit in such a scenario.
Athanasios Vamvakidis, director global y director general de Estrategia FX G10 de Bank of America. Thank you for joining us. Good afternoon.
Thank you, my pleasure.
Pues vamos precisamente a contarles un poquito más en profundidad cuáles son esas previsiones que esta misma semana ponía sobre la mesa Bank of America sobre la evolución de la economía global y sobre la evolución de la economía norteamericana en un contexto marcado por esa guerra arancelaria que está protagonizando el presidente de Estados Unidos, Donald Trump. Tal y como ustedes pueden ver en ese gráfico, el Banco